IndusInd Bank, a once shining star in the Indian banking sector, has suffered a dramatic fall from grace. Since reaching its peak in January 2024, the bank's stock has plummeted, wiping out billions in market value. Investors are left reeling, wondering what went wrong and what the future holds. This isn't just another market blip. This is a full-blown crisis, and it's sending shockwaves throughout the Indian economy. We're going to break down exactly what happened, why it matters, and what it means for the future. The speed and severity of IndusInd's decline have caught many by surprise. This wasn't a slow bleed, it was a market bloodbath. The bank that was once a darling of investors is now a cautionary tale, a stark reminder that even the most seemingly stable institutions can falter. The reasons behind this dramatic fall are complex and multifaceted, a tangled web of internal issues and external pressures. But one thing is clear, IndusInd Bank is in trouble. To understand the magnitude of this crisis, we need to delve into the specific factors that have driven IndusInd's stock price down to its current dismal levels. These factors, ranging from accounting irregularities to concerns about leadership stability, paint a worrying picture of a bank in turmoil. Buckle up, folks, because this is where the story gets really interesting. One of the most alarming developments in the IndusInd saga has been the revelation of discrepancies in the bank's derivatives portfolio. Derivatives, complex financial instruments that derive their value from underlying assets, are notoriously difficult to value and manage. When a bank announces discrepancies in its derivatives book, it's like finding a crack in the foundation of a skyscraper. It raises serious questions about the integrity of the bank's risk management practices and the accuracy of its financial reporting. For IndusInd, these discrepancies could potentially impact its net worth by a significant amount, a prospect that has sent shivers down the spines of investors. The market hates uncertainty, and this news has injected a huge dose of it into IndusInd's future prospects. Investors are left wondering, if the bank can't even keep track of its derivatives, what else is it mismanaging? Adding fuel to the fire, the bank has launched an external audit to investigate the discrepancies. While this is a necessary step to get to the bottom of the issue, it also prolongs the uncertainty and keeps the specter of further bad news hanging over the bank. Until the audit is complete and its findings are made public, investors are left in a state of limbo, unsure of the true extent of the problem. The derivatives debacle has shaken investor confidence to its core, and it's just one piece of the puzzle that explains IndusInd Bank's dramatic decline. But it's a crucial piece because it strikes at the heart of the bank's credibility and its ability to manage risk. And in the world of finance, trust and stability are everything. As if the derivatives debacle wasn't enough to rattle investors, IndusInd Bank has also been grappling with leadership uncertainty. CEO Sumant Kathpalia, initially brought in to steer the bank through choppy waters, was granted a one-year extension to his tenure. While this might seem like a vote of confidence on the surface, the fact that the Reserve Bank of India, RBI, only granted a one-year extension instead of the customary 3 has raised eyebrows. The shorter extension has been interpreted by some market analysts as a sign that the RBI is not entirely satisfied with Kathpalia's performance and is keeping its options open. This uncertainty at the helm comes at a time when IndusInd desperately needs strong and decisive leadership to navigate the multiple crises it faces. The last thing the bank needs is a captain who may or may not be at the helm a year from now. The lack of a clear succession plan only adds to the anxiety surrounding IndusInd's future. Investors are left wondering who will lead the bank in the long term, and whether the RBI's involvement signals a deeper level of concern about the bank's operations. This uncertainty at the top only exacerbates the existing worries about the bank's financial health and its ability to chart a course back to stability. Leadership transitions are always delicate, but they are especially fraught when a company is facing significant challenges. In IndusInd's case, the CEO extension has done little to instill confidence. Instead, it has only served to raise more questions about the bank's direction and its ability to attract and retain top talent. The clock is ticking, and IndusInd needs to find a way to address its leadership issues if it wants to regain the trust of the market. A disastrous quarter. The Q3 earnings report has set alarm bells ringing throughout the financial community. Now, let's take a closer look at one of the most pressing issues facing IndusInd Bank. The bank has been grappling with a significant number of struggling loans. These non-performing assets, or NPAs, have been steadily increasing, putting immense pressure on the bank's financial health. You see, when borrowers fail to repay their loans on time, it creates a ripple effect. The bank has to set aside more money to cover potential losses, which in turn affects its profitability. It's a challenging situation, and IndusInd Bank has been working tirelessly to manage these bad loans. However, despite their efforts, the rising NPAs continue to be a major concern. It's not just about the numbers, it's about the overall confidence in the bank's ability to recover and grow. Investors and stakeholders are closely watching how the bank navigates through these troubled waters. In the next segment, we'll explore some of the strategies IndusInd Bank is employing to tackle this issue and what it means for their future. Stay with us. As regulatory scrutiny intensifies, market jitters are becoming more pronounced. Investors are growing increasingly concerned about the bank's ability to navigate these turbulent waters. This heightened oversight is casting a long shadow over IndusInd's financial stability. IndusInd Bank is facing a perfect storm of challenges. From regulatory pressures to market volatility, the bank's leadership is under immense pressure to steer the ship through these rough seas. The question remains, can they successfully navigate this crisis? The broader banking sector is also feeling the heat. With IndusInd's troubles making headlines, other banks are bracing for potential fallout. The resilience of the entire banking industry is being put to the test. Will the sector as a whole be able to weather this storm? The future of IndusInd Bank hangs in the balance. Can the bank recover from this series of setbacks, or is this the beginning of the end? Investors, employees, and customers alike are anxiously awaiting the answer. The coming months will be crucial in determining IndusInd's fate.